Hello, everyone. Welcome back to my YouTube channel. As you may know, I'm Tatiana, your favorite new construction realtor, and I'm back today with a lender questionnaire with my guy, Danny. Danny, could you introduce yourself to us?
Hey everybody, my name is Danny Hernandez. I'm the VP of Sales at J&R Funding. A lot of times I have to elaborate on that and still let them know I am a loan officer. It's just another title.
Okay, awesome, awesome. And so now, how long? Oops, I'm gonna edit that part because I want us to see each other. Okay. So thanks for the introduction. So tell us, how long have you been licensed here in Florida?
In Florida, I've technically been licensed since 2017, but I have experience in a couple other different states as well too.
Okay, awesome. Well, we are going to discuss the Florida market specifically because if you don't know, I just passed my Florida real estate license. So I am super excited about that. So you're going to see a lot more content from me in the Florida area as well as interviewing lenders like Danny himself to help us navigate the market better. So now let me pull this up. All right. And so basically, I'm just going to ask you questions like, well, maybe about 10 questions on this list.
Random one, I guess.
Random, yeah,
Okay.
random. All right. So let's see. So, Danny, for anyone who's looking to relocate to Florida, how would you describe the Florida market as a whole? Especially for people who are looking to buy a home between the ages of, let's say, 30 to about 45. What would you tell us about that?
Well, I would probably also try to maybe question them on like what particular area of Florida they're looking to buy because it is going to vary. Like South Florida, more particularly, we're talking about Palm Beach County, Broward, and Dade. They're probably going to see most of the inventory that's sitting. So you might be able to get more of a deal, like work out, more of a better arrangement on like the price, the seller credits as well to help pay some of those closing costs as well too. Like that's probably the advantage I would say that they would probably have in the South Florida market. And likewise as well if you go a little bit more north. The difference is if you go more north, the ticket price is probably going to be a lot lower. And more specifically, I'm talking about perhaps like if we're talking about Osceola County, we're talking about let's say Fort Myers, Lehigh Acres, that area. That's more on like the west, like north part of Florida, or at least northwest of South Florida, where we're located. Those areas you're going to see probably maybe about anywhere between, and we're talking about the same specs, like single family home, 3 bedrooms, 2 baths, like the regular, standard single family home. We would probably see maybe about a 20%, maybe to 30% difference in the price if we're comparing it to like a South Florida home in like Dade County. The short answer is you're just getting a lot more house if you go more north.
Go more north. Okay, that definitely makes sense. Okay. All right, let me see here. Um, so let's talk about the rates, right? Let's talk about the rates and also buy down options. How can one take advantage of the buy down options if they're not, I would say, too keen on the current interest rates in today's market?
Well, that's something that I could probably go on a long rant for. Let me try to shorten it a little bit for you,
Okay.
just for all intents and purposes.
Mhm.
So the when it comes to buy downs, it's an immediate advantage for it's an immediate incentive for the lender. When it comes to the buyer, they're probably going to be wasting money to be really frank with you. And the reason I say that is because where rates are not projected to be higher than where they are right now. I mean, although we've been talking about this for years and we're just waiting, and I'm praying that's going to happen soon. For someone to shove thousands of dollars in loan costs just to have a particular monthly payment, it probably wouldn't make sense. And I'll give you a quick example. Let's say someone's dealing with a lender whose their lender cost is, we'll just call it, $1,500. That's their cost. But the payment that's presented to them with the rate combination is making the buyer say, hey, I want my payment to be like maybe like $100 to maybe $150 less per month. How much more do I have to pay in order to do that? And then they go ahead and get a little frivolous with buying down the rate, and they spend an additional $7,000, right? So that buyer now absolutely has to essentially wait until a particular point in time to refinance
Yeah.
to mathematically make it make sense.
Mm-hmm.
There's an equation about on how to calculate the recoupment period of time, which I'll be more than happy to go over with you as well. But the short answer for that, I would say, is that buying down the interest rate is not necessarily giving the buyer any type of advantages, at least in this market.
Okay.
It'll probably get them maybe like a short-term type of advantage, if anything.
Okay.
Because realistically, in the next 9 or 10 months, that same rate that they spent $7,000 for, they could have gotten it for free if they would have just waited 10 months.
Understood. Okay, so waited about 10 months before they take advantage of that. Could you
Yeah.
elaborate more on that part?
So like, I don't have a crystal ball. I can't tell you
Yeah.
exactly, hey, yeah, you know, in 10 months rates are gonna come down.
Yeah.
But you know, we like to go by the odds, and you know, the odds of you keeping this interest rate for the next, you know, 10, 12 months, Mr. Customer, is probably gonna be very unlikely.
Understood. And now speaking of that, as far as new construction, I know that you also work with new construction clients, right? And so we all know that, you know, if you decide to purchase a new construction home, you can use the builder's lender essentially to take advantage of the closing cost credit that they offer. So tell me more about that and where you come in to help clients like that who are interested in new construction and they really want to grab that closing cost incentive. Where do you come in?
So I actually don't come in. That's actually where I tell them, hey, go ahead and take all the credits that the new construction lender is giving you, because most of the time they're going to set it up where it's almost virtually impossible for any outside lenders to possibly beat that deal. But here's where you as a consumer could be, you know, pretty smart about it. The construction lenders the new construction companies, they'll have their preferred lender who's basically like the same entity, or if not, maybe they have some sort of, you know, relationship. They're going to set it up so that you're getting this super amazing seller credit that's going to help you pay down closing costs, and they'll give you most likely an inflated interest rate. But then they'll give you an option to use that credit to buy down the rate. And the average consumer who I guess is not, you know, very well versed when it comes to just, you know, buying down rates or just in general mortgages or home buying process, they're probably going to jump to bringing down their interest rate and using that whole entire seller credit, which does not make sense, and I'll explain why. It makes more sense to go with the higher interest rate that they're presenting to you, take the seller credit to pay off all your closing costs, and then a day or two after closing, if you reach out to a lender such as myself, I'm most likely going to be able to offer you a wholesale interest rate much lower than what you closed at. And a lot of people don't know this, but you could refinance even after you've just closed on a property. Just before your first mortgage payment's due, you can absolutely refinance. I've done it more than a couple dozen times.
Oh, okay. Oh, that's some good value right there. All right. Okay, perfect. And so now about that, let's see here.
Cook it up.
Oh, that's what I was going to talk about next. Okay, there we go. All right, so Danny, tell us about any like loan programs or grants you currently offer to home buyers. Are there any?
So we have the best one coming up pretty soon, July 1st. The Hometown Heroes program is coming back to Florida. They're gonna have a big pool of money that is gonna help out a lot of people buy their homes. It's basically a down payment assistance program that acts like a silent second mortgage. So if just a real-time example, let's say someone is looking to purchase a property for $500,000. They have great credit, not a whole lot of money in the bank, and not a whole lot of debt.
Right.
So what we would do is we would have them get pre-qualified early on, and then when the Hometown Heroes program comes back into play, which I do offer, I have a relationship with a lender that does offer that program. They'll essentially have about 3 to maybe 5% of assistance. It just depends on the loan program.
Okay.
But let's just, you know, for this example, we'll say 5%. So we'll say $25,000 in that same example, $500,000 purchase price. That's going to be their second loan. So they're only going to be paying a loan for well, they're going to be making payments on a loan amount of 475,000. But the remaining 25,000, they don't have to make payments on it, and it's going to be paid off once they're able to either sell their property or if they want to refinance later on down the road. So if they want to refinance later on down the road, then it has to be added into the equation as far as their loan balance. But if they're just paying their first mortgage for the next 2 years, that second mortgage it's still going to be there. It's just they're not making payments on it.
I like that. Okay, that's interesting. All right, and now as far as any other options you want to mention?
So there are other down payment assistance programs. How they differ from Hometown Heroes is that the way that the second mortgage is set up, it's typically going to be about 2% higher than whatever their note rate is. So just a quick example of that. Let's say someone's going with an FHA loan and their interest rate is let's say 6.875. That second mortgage loan is going to be most likely about 2% higher than that, and it's going to be amortized over 120 months. So they do have to make that payment for that second mortgage. It's probably not going to be very much. But I would just, for the sake of making sure that everyone who's watching this video is going to be in the best predicament, I would tell them to refinance altogether, like once they see rates come down, because after like the second year of making payments on that second mortgage, if you were to go the route that's outside of Hometown Heroes, that is, you're going to be spending more money in interest than you really should.
Okay, that makes perfect sense. Thank you for breaking that down.
And to be a little bit more honest on that, some people, and this is kind of like a biased opinion, will probably look at that as almost like taxation on like the people that really can't afford to buy a home. So like I don't discourage it, because hey, it puts people in homes, opens doors, literally and metaphorically. But just understand how it works. That's all.
For sure. And speaking of property taxes, I mean, how are they looking over here in Florida?
It depends on where you want to live.
Right.
Miami-Dade County, their property taxes are probably going to be a little bit higher compared to a lot of other counties, but it also depends on if you're looking to move to like a place that's more of like a higher desired area. Boca Raton, for example, their property taxes are pretty high if you're like more east. What I typically tell people, just to kind of understand and get a gauge of property taxes, there's a website that I use. It's called smartassets.com. You could plug in the zip code, you could plug in the county, and then they'll basically spit out an amount that you're going to be expecting to pay for property taxes.
Oh, that's definitely useful. Thank you for that information.
Yeah, absolutely.
Okay, cool. And so now, what would you tell anyone who's watching right here, the people who are kind of like on the fence about buying a home right now in today's economy, today's real estate market? Like, what would you tell them right now?
I would tell them, don't be so timid to look into buying a home. And the reason why I say that is because if you're just listening to the media and all the pessimism that's out there about buying real estate, then you're just gonna miss the party. And when I say that, I really mean it, because there's a lot of opportunities out there. Like, yeah, rates are not that great right now. Like, I'm just gonna tell you, hey, they're not that great. But you could still get a pretty good deal out in this market if you're one of the few percents of folks within the country that can be pre-qualified for a home. Because I'll be honest with you, a lot of my referrals that I pre-qualify, it takes a little bit of elbow grease, but we're finding ways to get it done.
Yeah. There's always other ways to kind of work around to help you get pre-approved, help you get qualified to purchase the home you want. So I would agree with you on that one. Sitting back and just saying, okay, I'll wait.
Right. And then it's like, pick your poison. Like do you wanted to wait, and now let's say a year from now rates are 1% lower. Okay, great. Like you waited, your rate's going to be 1% lower, but now your purchase price is like $25,000 higher. So and the seller is not willing to give you any credits to pay your closing costs. They're not willing to work with you on some of the I guess the cosmetic stuff that they would want to remedy. Like those are things you need to think about. So it's really important to educate your customers on the cost of waiting, essentially.
For sure, for sure. Usually, what they say in real estate, they say, marry the home but date the rate.
Yeah,
Right.
yep.
And so that's basically what we're doing right now, right? You have to just be smarter and just get into the market if you want to buy a home, and just also reach out to an agent like myself or also Danny to help you. We're here to answer any questions you have to help you get started. So let me go ahead and find the next question. Okay, there we go. So, Danny, are adjustable rate mortgages making a comeback in the Florida market?
Absolutely not.
Okay.
There is no gain right now for any lender to offer an adjustable rate because rates are projected to come down. So it would basically mean that the bank is kind of shooting themselves in the foot because they're going to be giving you a rate that's a little bit lower compared to like the national average. But I mean, let's be real. That same consumer who went for an adjustable rate is probably going to be a more well-informed consumer. And if that is the case, which most of the time it is, they're just going to refinance. So it's an emphatic no.
Got it. Okay. All right. So let me see. Okay. Okay, so how do flood zones in coastal areas affect the insurance here in Florida?
Oh yeah, no, it definitely does. So so it just depends. And I can actually speak on this because I personally live in a flood zone. However, if you live in an area where you have an HOA, which is predominantly South Florida, usually always there's going to be an HOA, and we're talking about more so like newer communities, but either way, if they have an HOA, there typically is a master policy that covers that insurance. How it might impact that person is now we have to factor if we're pre-qualifying them, we have to factor that cost each month to pay that flood insurance, along with their hazard insurance, along with their property taxes and everything else, principal and interest.
Yeah.
But I will say this though, with flood insurance, it's one of those things where it's required if you're in a flood zone, and we usually find out once we're processing the application. There is certain situations where people will get rezoned as like a FEMA designated flood zone, and then they're obligated to pay flood insurance. So those and I've been in that situation, and it's not the most funnest one where someone's used to paying $400 in insurance, and now they have to pay $1,000 each month.
Yeah.
Yeah, but it just depends on the area, that's all.
Got it. Okay, cool. Let me see just a couple more. So Danny, would you say that Florida is more of like a long-term investment location for anyone who's looking to relocate to this area, and why?
I would still say yes.
Okay.
I would say yes because who doesn't want to live where there's palm trees? It's the quality of life that you're also paying for.
Right.
So I would just say that people are just kind of discouraged in this market, which is understandable. I get it, but everything what goes up must come down, and there's gonna come a time where you're gonna start seeing your yield on your investment. So if you don't see it immediately, that's just a result of a combination of factors, economic factors, the mortgage market, how interest rates are, and then also what we haven't really talked about is just regular hazard insurance in South Florida, which that's a whole nother long topic because there's not a whole lot of players when it comes to insurance in Florida, and the reason being is because there was a lot of fraudulent insurance claims that were basically being made by a lot of homeowners back in 2022, and as a result of that, there's just one main player for homeowners insurance, which is going to be Citizens.
Oh wow. Okay, well thank you for that. I'm going to ask you one more question. Okay. So I would say for me, like before I got my license, I heard that there are a lot of cash buyers here in Florida. Is that true?
That is.
That is true.
That is.
What's the average like percentage from cash buyers purchasing homes here as opposed to clients who are financing on their homes here?
I would still say a lot more people are financing it.
Okay.
But every now and again, you're gonna get a cash buyer who's gonna try to be an opportunist.
Okay.
Like my last open house that I actually did for a friend of mine. She was telling me, hey, we got a buyer, and I'm like, okay, great, send him over. I'll do the loan. And she's like, nope, he's gonna be paying cash.
Oh,
And I
wow.
was like, all right, hey, good for him, good for him. So I couldn't really put a percentage on it. I would say it's kind of just case by case. That's probably the first transaction that I've seen that was cash, that I was somewhat a part of in like the last couple months.
Mm-hmm.
And from what my agents have been telling me, there's still mainly people that are just financing. The people that are paying cash are going to be the fix and flippers.
Okay.
Like usually
Yeah.
all day. So like
Yeah.
we're talking about distressed properties, that like really just need like a facelift. Like
Mm-hmm.
those guys are still thriving when it comes to fix and flips.
Yeah, yeah, I would say that. I agree as well. And so now I've been speaking to a few people who were looking to buy a home, and I've heard it a few times in the past month or so where someone would tell me that they're looking to buy a home cash, but they are trying to use their Coinbase account or their Bitcoin. Have you been hearing about that, or what's your take on that?
So that's perfectly fine.
Okay.
In fact, I have a product that is no income verification, no employment verification type of primary home loan product,
Mm-hmm.
where they just would simply need to check all the boxes outside of the norm, if we're talking about like a regular conventional loan.
Okay.
So let me elaborate. So basically, if someone is like a day trader and like they can't really prove what they make on paper,
Mm-hmm.
and if they do, it gets a little bit hairy, in the mortgage world.
Right.
So in the mortgage world, you have to meet a certain debt to income ratio, and let me just explain how that works. Let's say someone makes $10,000 a month, and all their expenses are $5,000 a month. Their debt ratio is going to be 50%.
Right.
We want, like in the mortgage world, we ideally would probably want it much lower than that.
Mm-hmm. Mm-hmm.
But let's say, for example, that person's debt ratios are really, really high, but they have a lot of liquidity. Then what we would do is it's called a CDFI.
Mm-hmm.
My company is considered to be this. It's a community development financial institution,
Mm-hmm.
and we offer a product that if you met that type of criteria, and your credit was let's say fairly decent, 700 and above,
Mm-hmm.
you could put as low as 10 to 20% down. We would qualify you completely based off of your assets. You would just need to at least have that down payment requirement and have the reserves requirement. So there are people that are still like that, and it's not just crypto investors. There's folks that are retirees that they only make $1,000 in social security, but they have $3 million in the bank.
Mm-hmm.
Okay, great. Buy a home. I could get you a loan product that would allow us to open that door for you.
Awesome, awesome, awesome. I love that. All right. Well, you know what? Thank you so much, Danny, for jumping on this Q&A for the Florida market. And you have experience in other markets as well, right?
Yes.
So he will be returning to the YouTube channel to give us more information on other markets outside of Florida. But as you already know, if you love the content that I put out, make sure you hit that like button and subscribe for future content just like this. And if you are in the market searching for a new home, you can visit my website, New Homes Galore, to search for new construction homes based on your own criteria. And also, Danny, how can people reach out to you in case they had more questions?
They could reach out to me they could give me a call. They could reach out to me on my social media. It's my Instagram. It's growing. It's not there yet, but it's underscore Danny underscore MTG, just abbreviation for mortgage.
Got it. Sounds good. And I'll also link his information below as well with his phone number to reach out. So I hope that you all enjoy this, and we'll be back soon. Bye. That was really good.
Oh, thanks. I thought I did bad.
What are you talking about? Not at all. Not at all. Thank you. This was dope. Okay, so let me just go ahead and pause this. Okay. So that's it. I'm gonna go ahead and edit this up sometime this week. Get this posted. Did you have any questions for me?
No,
or anything?
no, not at all, not at all.
Okay.
I'm glad that you had me here. Oh, is there a Wi-Fi for this building?
Yeah, there is Wi-Fi. Ooh, I just suck at the Wi-Fi. I gotta see what it is.
Because
Let me
before I forget, I did want to just take a look at the UWM dates, so that at least this way, it's something you can kind of write down and then just figure out if it's something that you wanted to maybe
Oh
do.
yeah, for sure. Let's see. I should be able to share the Wi-Fi with you, right? Some way, somehow. So try to, let me see. Try, okay. So try Riverloft Guest and then RIVR underscore guest. Oh, I'm sorry, RIVR guest, all lowercase.
We're in. Okay.
It worked?
All right. So UWM. Some guy is asking me for a quote for a jumbo loan interest rate, and this is really weird about it. Like, look at the text message thread. Yo, I'm like, yo, who is this? Because I'm thinking it's like one of my homies.
What the heck?
He's like, what's the rate for 15 years? And I'm like, there's no one size fits all, but need a loan scenario. But once again, who is this? And he's like, I want to refinance my home. My dog Marcus gave me your number.
He sounds aggressive.
Yeah, yeah. And then he's sending me this. He's like, it's a jumbo loan. I was like, how is it a jumbo loan if you owe $314K?
And then he's saying like question mark. Who? What the heck? Without pricing it out, I think you're right. No, that's really weird. How they're reaching out to you like that, and you don't know who this person is at all.
At all. But what price am I right now? I'll even show you how I do it.
That's
314K.
crazy.
I'm asking to clarify because you said jumbo loan. If it's jumbo loan, then the loan amount would be